Testifying before the House Appropriations Committee Tuesday, Treasury Secretary Scott Bessent says progress is being made on foreign trade talks, but not with China.
There are 18 very important trading relationships. We are currently negotiating with 17 of those trading partners. China, we have not engaged in negotiations with as of yet.
His comments come after President Trump told NBC's Meet the Press that, quote, at some point I'm going to lower them because otherwise you could never do business with them, and they want to do business very much. The current tariff rate on Chinese imports is 145%. Last week, China's Commerce Ministry says it's assessing whether it wants to begin negotiations with the U.S. CBS News MoneyWatch correspondent Kelly O'Grady joins us now. I feel like every day we're sort of doing the will they, won't they. Yeah. Is damage already done, though?
I think for many, yes, especially small businesses. I mean, we've talked to a lot of small businesses. I don't care what industry. They're just getting their first invoice that has that tariff, surcharge, if you will, especially if you're ordering from China. And a lot of them are saying this is costing me thousands or maybe even, near $1 million, depending on how much inventory they're bringing in. And they're saying, I'm just not going to be able to handle this. The other thing that I will mention, though, this just broke within the last half hour. We are learning that Treasury Secretary Bessent will be meeting with China's lead economic representative in Geneva this Thursday, May 8th. So that, I think, will at least give some investors hope that maybe, we heard from him earlier today, nothing's happening. It now looks like something is happening. But back to your point, you have these businesses that are planning for the future, and they can't really wait for whenever that deal ends up getting done.
And we spoke to one last week who said, I thought being an entrepreneur was the American dream, and it's turning into a nightmare. It was just a quote that stuck with me. So Tuesday, the UK and India agreed to a bilateral agreement, India agreeing to gradually lower import taxes on goods from the UK. The British government actually says the vast majority of products will be, quote, fully tariff-free within a decade. How significant is that? I mean, is President Trump's policies sort of making the whole world look at their own trade policies? And I mean, is that good for global trade?
It's interesting because I think, yes, some in good ways and some in bad ways. I mean, I take heart from this, that India does seem willing to negotiate. And if there is a good deal, they will bring down those barriers. That is, of course, something that President Trump is looking for within his own negotiations. But there's also this element that our trade policy, the change in trade policy as the U.S. is spurring some of our allies to come together and think about, well, if we are not going to have as much access to the U.S. markets, we need to strengthen ties between each other. That's also something that we have seen with the Asian countries as well. So this is going to be really interesting to see how this plays out.
I didn't think of that. New data shows the U.S. trade deficit reached a record high in March. So that measures the gap between what the U.S. sells overseas against what it buys. The spike was, of course, led by imports as companies are really stockpiling ahead of these tariffs taking effect. What products led to the surge?
Okay, so pharmaceuticals was a big one because, of course, we are hearing that there could potentially be tariffs on that sector in the future. Also, cars and car parts getting ahead of that deadline, as well as computer accessories and electronics. What I will note, though, is that that was sort of backward looking. That was March data. I was just looking at the week over week data. We have seen a drop in imports from China in particular. 43% versus last week. That tells you that people stockpiled, companies stockpiled ahead of that deadline. And we're also hearing that a lot of companies are canceling their orders because they're saying, well, I'm just not going to pay that 145% tariff.
Yeah, it doesn't make financial sense for me. All right, the Fed meeting. What are you? We know they're expected to leave interest rates unchanged, but what are you going to be listening for? When Jerome Powell speaks and the markets listen, and you speak Jerome Powell in ways that I don't, what are you going to be listening for?
I guess I speak nerd. I am going to be looking for how they walk the tightrope between potentially higher inflation and potentially slowing economic growth, right? Because you put those two things together, and that is stagflation. I want to hear how worried he is about slowing growth after we had that negative quarter of GDP.
And what would he use the word worry? I mean, he uses the word uncertainty.
He uses the word uncertainty. He uses the word concern. I think I want to hear from him slowing consumer sentiment. Are you seeing that translate into the hard data? And when will you act? What is going to be the thing that makes you cut interest rates or raise them potentially with higher inflation?
Kelly O'Grady, thank you.